Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you here on this Thursday, the 18th of June, 2020. Welcome. Now, listen, let's get started right here, and let's open up the charts right here and take a look at what's going on. You know, these are jobless claims. You ever see, look, going along for years, like these low, down low, and then all of a sudden it's just exploded upwards like nothing we've ever seen before. We've never seen anything like this before. And if what you can see is the first month after it happened, the event that caused all this, it's just an explode in joblessness. And you can see that it's been settling back down, but it's come back down to a base point here, and it's not going any lower. It's continuing to expand. And so now what we're up to is 46 million Americans. And it's still growing. It says, despite the hope of restoring non-farm payrolls recovery and this overhyped bounce in retail sales, it says, fighting the lack of a V in industrial production in the last week, 1.5 million more Americans filed for unemployment benefits. And so you can see that right now we're at a point where about 1.5 million every week are continuing to file unemployment benefits. So this number of 46 million is still up and growing. And the big question is what about, look, see this green bar here? This shows all of the jobs they created since 2010. The green bar. And these are the jobs that were lost, is the red bar. The jobs that were lost just in the last 13 weeks. We're in a depression. And what about when in July, when we have these, they're going to start to cut these benefits that have been coming in, you know? It says, as it increases eligibility for the jobless claims to self-employed and gig workers, and extends the maximum number of weeks that one can receive benefits, and provides an additional $600 per week until July 31st. So it's going to run out on July 31st. And we got, like, right now, 46 million. And a few more weeks goes by, it's probably going to be up to close to 50 million people. And all of a sudden, they're not going to get that $600 a week anymore? Oh my goodness, this could generate some tremendous problems. And then we could start to actually feel the effects of this depression. We can start to actually feel the effects once the end of July 31st runs out, and then we start to move progressively into the following months. Then we're really going to start to see it. And it's going to take on a whole new flavor from what it is right now. Let's take a look now at gold price. 1724.30. It's down $2.30, but it's still basically in a range that it's been running in for a little while now. Silver's at 1738, and it's down 12 cents. So it's at the bottom of its range right now. But you can see this range. The range is from around 1730 to 1770. That's the range it's in. So they're kind of range bound. Let's take a look at cryptocurrency today. We're looking at 266.4 billion with a Bitcoin dominance of 65% and a Bitcoin price of 94.16. So it's not going anywhere either right now. So you got the assets. If you want to get out of the dollar, those are the ways out. Bitcoin, gold, silver. And they're not really going anywhere, any of them right now. The dollar's kind of riding kind of strong right now. We got so many deflationary pressures out there. And, you know, the central banks, even though they've made it clear to everyone, hey, we're going to support this system no matter what, the central banks are standing there right now, and it's like they're watching one problem develop after another. within the financial system. And what they do is once a problem develops, then within a matter of short period of time, they race over and pour money on it. Like if it's in the corporate bond market, they'll go out and buy corporate bonds. And then they'll fix the problem. And then all of a sudden the problem will pop up someplace else. Ever since we had the repo market crisis, problems for the Fed have been popping up one place after another, and they've been squishing them with money. But right now, they're not doing adequate what they need to do for the small guy. Yeah, they're covering all these Wall Street guys really well. They're pouring oodles of money on them, but they're not getting the money out to the small guy. And this is where the problem is now. Let's take a look now at the stock market. We're going to take a look at the Dow today. It's down 64 points, 26,055 today. We're still under. Remember, I was telling you guys we're under a watch, just like in a tornado watch. You watch out for the market to fall. We're under a market crash watch right now. I haven't removed that watch. Conditions are right for the market to crash. But at a certain point, the Fed's going to step in if that happens. Unbelievable the power they have with the printing press. It's an unbelievably powerful machine, that printing press. But there are a few things that they can't solve. One, they cannot solve inflation once it gets running away. Once it starts to go, inflation's a self-perpetuating, self-feeding cycle, and they can't stop it. And, I think part of that is they know that. Ultimately, they know that, and they're trying to be careful so that they don't create inflation. The problem is the system is collapsing right now. It needs ooples and ooples and ooples of money, and if they start being too stingy with it, it's gonna break out someplace with a huge collapse, possibly in the markets. And then by the time they step in is only when they have they are reactionary. They react. They're not in there ahead of time. They're always waiting until something happens and then they react to it. And so this market is on a precipice right now. It could fall big. And if it falls big, then they will react, but only when they need to. Let's take a look now at crude oil, 38.71. It's up 75 cents on the day, or 1.98%. Crude oil's starting to get up near 40 bucks. 38.71. Let's take a look at U.S. Treasuries today. And we're looking at falling yields again. U.S. 10 years at 0.70. It's fell 3 basis points. And the U.S. 30 years at 1.47, and it's fell 4.7 basis points. And now let's finish off the show here with the U.S. dollar index at 97.47, and it's rising pretty quick today. I'll tell you guys, we are going through a transition in the world right now, and the old system that we used to have, there's a lot of fear because most people out there see the transition happening, and it creates fear, and fear makes us go back to the old simple things, the weak things, the things that we shouldn't be doing, And one of the things that we can't tolerate in this world and should not be tolerated is any form of inequality in any way. We are actually one species, the human species, and any form of, whether it be, take the form of racism or gender inequality or any form of inequality whatsoever these are the old things of the past that caused wars and caused diseases and famines and everything else and decimated our species. Do we really want to move back into the past and become more barbaric? Or do we want to move toward the future and become enlightened and become a civilization that prospers? It's all down to that, What do we really want? What do we really want out of our lives? What do we really want for our children? We're going through this transition period right now. It's happening in real time. And you're not going to be able to stick with the old models. You got to move ahead. You got to be progressive. Thank you guys for listening to the show. Like and subscribe and give me a thumbs up, and we'll catch you guys in the next episode. Bye-bye.